Welcome. We're back. Excited to start a new week. Personally, a pretty big week. It's my final week of the semester for college, and then I have a 4-month break. So for 4 months straight, I get to just trade, stream. It's gonna be really fun. I'm excited for that. It's also my birthday week, and the first week of May. So important stuff. Good luck to everybody trading this week. I'm gonna go over Bitcoin, stock market in general, like the S&P and the NASDAQ. I'm going to go over some specific stocks that I'm looking at going into the month, like SOS, EBON, Sundial, CGC, Fisker, a bunch of different things I'm going to be talking about. So let's get ready for the week. Hit that like button, hit that subscribe button. We got a lot to talk about tonight. Sorry for my hair being so messy. It's late on a Sunday, so whatever. Let me put on my mic a little bit and let's kind of get into it. We're going to start off with Bitcoin. It looks really good in my opinion. Posted like a little clip video earlier already talking about Bitcoin and EBON and SOS on my channel. If you didn't see it, it's like my last video, but Bitcoin looks pretty good to me. You had that bullish cipher, very textbook bullish cipher, perfect X to B retrace, perfect X to D retrace at the 786, which is exactly where Bitcoin bounced. That is technical analysis for you. And then somehow this developed into an inverse head and shoulders, which we've been talking about since like last Wednesday and Thursday. And you broke out of the inverse head and shoulders, and then even better, this is your strongest way to confirm a breakout. You got a break hook, and now you're working on the go, right? This is your break. You broke the resistance line. Then you got your hook, which means you're back testing the neckline and you're flipping your resistance into a support. And now you're getting the go, which is just the price action to the upside. And even better when you have a bullish engulfing candle. And if this candle does close like this on the 4-hour, you are going to have a bullish engulfing candle. So that's like a textbook breakout confirmation. Not a lot of volume, but there was decent volume on this green candle right over here. And that's Bitcoin. It looks pretty good in my opinion. It's also trying to break above this 57.5 level. As you see, as we speak, Bitcoin is running. It's up 2% in the last hour. So good stuff, Bitcoin. Pretty much at session highs right now. Hopefully that continues, and hopefully that can help out other stocks like EBON and SOS, which we're going to be talking about very, very soon. But before we really get into individual stocks, I want to just talk about the market in general and my thoughts going into May. April was a pretty good month for the market. I mean, the first half of April was really bad for small caps and mid caps, but the second half of April we saw a lot of bounces in those small caps and mid caps, and then pretty much all of April was great for tech stocks and large cap stocks, as the S&P and the NASDAQ both went to all-time highs in April. You had a huge earnings week last week where a lot of companies beat their revenues and EPS, like Apple and Amazon. Like most of them did. It was really good. Not that you got great reactions. Really, the story from last week was a lot of big companies beat earnings very strong. Facebook as well. But there was not huge reactions. Facebook did have a nice reaction to earnings, but on a lot of these companies, like Apple was down like 0.5% after their earnings, and they crushed their earnings. So that was really the story last week. I feel like there was already a lot of expectations running into earnings. It might have just been to sell the news, where a lot of these stocks were already running up like crazy weeks prior to their earnings, right? So not too concerned with that. Looking at the futures going into tomorrow, they're green. The S&P futures are up about 0.5%. NASDAQ futures are up about 1/3%. So pretty nice. Not like a crazy move up, but they are certainly green, and hopefully if that stays overnight, we can have a nice open to May in the market tomorrow. In terms of the actual S&P and the NASDAQ though, I still think you're in risky areas. Can you continue going up? Sure. You're in the greatest bull market ever, in my opinion. So yes, the trend is very, very strong, but I just think you're in areas where you look technically overbought. I mean, if we look at the NASDAQ, you had a very big rejection off of the new all-time high. You created a new all-time high, I think on Thursday last week. Yeah, on Thursday you made a new all-time high. You gapped up in the morning, if you remember, and then right away after the gap up, you just sold off super heavily, and then Friday also was a pullback day for the NASDAQ. So very big rejection to the all-time high. The MACD does not look good on the daily. You just went back to red for the NASDAQ. If we take a look at the S&P 500, you're okay for now, but there is some classic bearish divergence developing on the daily RSI, on the 4-hour RSI, and you're just kind of walking this 4174 support. If you break this support, you really have, I think, like 2% room to the next support, 1.5%. So if you break 4174 on the S&P 500, you have at least another 1% room to the downside before getting to a major support. So if you do break 4174 on the S&P, I'm probably going to short the market, and not like individual stocks, just like the S&P 5. There's like SPY puts or whatever, but of course futures are green for now, so you don't have to worry about that yet. But you know, if you do break supports with bearish divergence at the top of this wedge, where historically the last 4 times you've been at the top of this wedge, you've had a pretty big pullback, I will not be afraid to jump on some puts for a little bit of maybe a 1-2 day play. But again, that's only if you break support. You're still above support for now, and futures are green, so not worrying about it right now. Futures were good. And that's really the story with the S&P and the NASDAQ. I do think there's going to be a scenario in the market for a lot of these large cap tech stocks where it's like, what now? Because they just had very big runs up to their earnings, and their earnings did even, like, people were already expecting huge earnings for Q1 for a lot of the big names, and they got them. They got really good earnings for Q1. But I think we're going to enter a situation where it's like, what now, right? We've already seen the numbers. Now we have to wait a long time until catalysts come out, until earnings come out. I think we're going to be in a very, very quiet time for a lot of large cap names. And we've already had a lot of news come out, or we already had a lot of news that we were waiting on coming out from Biden, from Jerome Powell. It's just like in March and April, we got a lot of catalysts and a lot of news. And I feel like now we're maybe going to be entering a quiet period, where it's just going to be price action. There's not going to be a lot of news like there has been lately. I think really the main thing to look at again in the next couple of weeks is just reopenings, COVID, how the vaccines are doing, and just really if life can really return semi-normal or not. I think that's what the market's looking to see. But without any catalysts, I just don't know. I think a lot of things are currently overbought. If we're talking about large cap stocks, I think we are going to see a decent amount of pullbacks in a few large cap stocks that are just, they're overbought. There's no new catalyst for at least the next few weeks. And I just think we're just in areas where it makes sense to pull back a little bit, maybe to reset the oscillators, consolidate a little bit, create new supports, and then run again. Who knows? We're still in a bull market. I'm not saying the market's going to crash. I'm just saying I think it's going to be a very quiet time for a lot of big stocks, and I think some people might just be taking some profits. But on the other hand, I think a lot of the stocks that have not been running up with the market and that have been selling off like crazy in the last few months, pretty much ever since the end of February, I think now they are going to be in areas where they can start bouncing. A lot of the small cap names do have earnings to be released. You know, a lot of the large cap names had earnings last week. In the next few weeks, we are going to be getting some more earnings for Q1 for small cap names, which will be interesting. And just a lot of these small cap names, pot stocks, EV stocks, crypto mining stocks have just sold off to insanely low levels that are, in my opinion, pretty good value areas for honestly like long-term swings. The only question, and obviously this is a question I've been asking for a long time, and really my thesis is, if the S&P and the Nasdaq do pull back at these levels, which is in my opinion very, very easy to occur, that literally just takes 1 or 2 days of breaking supports and you could be headed down to retest much lower levels. Will small cap and mid cap names also pull back? We saw on Friday when the S&P and the Nasdaq were red, a lot of small caps and mid caps did not do well on Friday. But we also saw, while the S&P and Nasdaq were going sideways most of last week, pretty much up until Thursday morning, Monday through Wednesday were great for small caps and mid caps last week. The swing trades were absolutely crushing it. Like I think on Wednesday at the market close, there was like 6 or 7 alerts that I put out that were over a 10% gain for last week alone. So we were just crushing it, but then you had that very big pullback on Thursday around noon. So we're going to see, I think when we see the S&P and Nasdaq pull back again, really take a look at the Russell and small caps and see if they're also pulling back with the market. I think what you're really going to be looking for going into May is look for small cap stocks that are showing strength against the red market. So when we have a big red day on the S&P and the Nasdaq, look for the small cap names that are having a green day. I think those are the names that you might want to be in for May. I think there's a lot of names that it's not going to matter what the market does. They just sold off too heavily. They have potential catalysts coming up, and those might be the names you want to be playing regardless of what the market does this month. All right, so that really just covers my thoughts on the market. Now we're just going to talk about some individual tickers for maybe 20 minutes. I got a lot of tickers to talk about. Yeah, Stephen, we could start off with BNT. This was the crypto alert that I put out on Friday, I believe. It's up maybe like 2 or 3%. Let's see, it's up about 3%. So it was up a little bit higher. It was up 5% yesterday, but it pulled back when Bitcoin pulled back earlier today. Trade still looks good. The divergence on the daily looks nice. You're well above the 658 support. And honestly, it could be breaking out of this inverse head and shoulders like as we speak, just like Bitcoin is, or Bitcoin already did. So yeah, looking nice for this crypto trade that I put out in profit. Let's talk about some individual stocks. I'm just going to start off with 4 stocks that I'm looking at going into the month. So yeah, these are 4 stocks. 2 of them are pot stocks, 2 of them are crypto mining stocks that I think look pretty decent. Of course, you still need to wait for confirmation. That's why I've not put out official alerts on any of these yet. I need to wait for confirmation from the market. But I'm just throwing my watch list going into the week and going into May for 3 to 4 week swings, right? So we're going to start off with the 2 pot stocks I want to share with everybody. Very well-known names. The first one is CGC, Canopy Growth. It's looking pretty interesting in my opinion. The only issue here is you don't know what's going to happen if the market pulls back, and that's really the only issue for a lot of these names. Where the technicals look good, they have yet to have their earnings, and if we look at the last earnings on CGC, it had a huge run up to earnings. I mean, look at this. Before the last earnings on CGC, in the weeks leading up to earnings, it ran up like literally over 100% in the weeks leading up to their prior earnings in February, in the beginning of February. So huge run. A lot of pot stocks were running then, to be fair. So right now you're in this downsloping channel. You already did bounce off of the 200-day moving average. And I think if it gives a little bit of a pullback, let's say if the S&P has a red open on Tuesday or whatever the case may be, you also have classic bullish divergence on the daily, and it's very, very close to breaking out of this supply line. CGC looks pretty interesting. I need to wait to see, right? I'm not alerting it officially yet. I just want to see what happens, but I do think that CGC is due for a bounce during May for a swing trade. And then the other one I'm looking at is Sundial, which also looks pretty similar to CGC. Classic bullish divergence is developing on the daily. You have a falling wedge, which you technically already broke out of. Now you might be working on the back test to flip your resistance into a support. So Sundial also looks pretty good to me. You even had 4-hour classic bullish divergence, but again, you have to wait for confirmation from the market. So those are the 2 pot stock names that I'm looking at going into the month. CGC, Sundial. We'll see how they confirm. Now we're going to talk about, I already kind of put out like a little mini clip on these 2 stocks earlier today, but we're going to talk about SOS and EBON. And even before I get to the charts, I need everybody to keep in mind, I'm going to be very, very aggressive on the SOS and EBON trades should I put them out. I don't even know if I'm going to officially alert SOS and EBON yet, just because I need to wait for more confirmation, like I said. But if I do put them out, they are going to be very aggressive trades. And I'm going to show you what I mean by that in a second here. Let me fix my audio a little bit and just give everybody a reminder to hit that like button, hit that subscribe button if you're excited to get into the week. If you support my channel, if you want to send me a tip, that's the pinned chat. And let's talk about two very, very, in my opinion, interesting stocks, okay, that I'm looking at right now. SOS and EBON. They both are pretty small stocks compared to most other stocks. And they're pretty much blockchain integrated crypto mining solution stocks, right? They had a lot of social media hype back in February and March, and then when Bitcoin kind of had that pullback in April, so did these, and they kind of got crushed, especially with a lot of other small cap names. So SOS went from $15.92 on February 17th. It was $15.92 roughly. It is currently $4.22. That is a huge pullback. All right, EBON went from, let's see, $13.69 to $4 in a matter of pretty much 2.5 months, give or take. So both of these stocks lost so much in about 2.5 months while the market was making all-time highs. Now, there were a few things. I believe there was a short report on SOS, maybe from Hindenburg. Somebody correct me if I'm wrong, or it was EBON. It was maybe even both. I don't know. But I'm looking at the charts right now, and I'm telling you, these are where smarter money takes their bet. I mean, this is up over here, and you know, when they were above $10, it was just, sorry, wrong chart. When these tickers were above $10, it was just social media, FOMO, pumpers, retail, just way too overextended because of hype. But now you're in areas where all the people who were FOMOing, they got crushed. They lost a lot of money because they're not entering near supports, they're entering near resistances, right? And what I always teach is to enter near supports, not near resistances. So yeah, thank you for confirming that for me, mate. Yeah, so they both had short reports. They sold off because they got way too crowded and people took profits. They sold off because small caps sucked for the last 2 months, and they sold off because of short reports. But they've already sold off. That's the thing. Are they done selling off? I can't tell you. There's no way I can know that for sure. But I do think that they are certainly in areas where there can be demand and you can manage your risk. Even if they do continue selling off, you can set a stop loss that is meaningful. It's not just a random stop loss you can set. And so let me kind of zoom into these charts and give you more of a little bit of my rundown. And if you missed the beginning of the stream, this also ties into Bitcoin, which looks good in my opinion. You bounce off the PCZ of the bullish cipher, a huge bullish cipher that took like 3 months to be created, or 2 months. This pattern took 2 months to be created, and then you followed it up with an inverse head and shoulders, which is another bullish pattern. And then technically you're kind of bull flagging, like literally as we speak on Bitcoin. So Bitcoin looks good in my opinion as well, right? You're maybe even breaking out of this bull flag as we speak on Bitcoin. So there's a lot of variables lining up on SOS and EBON. And let's actually talk about the charts. And I told you I'm going to be aggressive if I put out these trades. And if these trades do play out, it would be a 25 to 40% gain on SOS, and it would be a 50% gain on EBON. Those are how much I'm targeting. So that sounds like a big number for a regular swing trade, 30 to 50%. But you have to remember, if we just really zoom out, that's like nothing compared to how much they sold off, like in the grand scheme of things, right? These targets are so small compared to how much they just pulled back. So that's why a lot of the times when you have really big moves to the downside, you can get big moves back up to the upside because that was an extreme sell-off. So even if you just get a small bounce, that could be a huge gain just because of the fact that it pulled back from $16 to $4. Right? And we're only targeting about $1.50 higher, and it could be a great gain if it plays out. So again, just to reiterate, this is not financial advice. I haven't even alerted these yet. I still need to see what the market does. but you're at supports and you're in areas where I think it makes sense to get bounces. And even if you don't get bounces, you can set a stop loss that makes sense. So if we look at SOS, $4.20. It was your support on this candle, and it was where you closed on Friday, okay? You also are showing hidden bullish divergence on the daily where you made a higher low from this low to this low, and you've already confirmed your hidden bullish divergence, okay? Now, 420 was also your resistance on this candle right over here on January 2nd of this year. Hold 420 and SOS looks primed in my opinion. What happens if it doesn't hold 420? You have a stop loss. You only lose a little bit. You only lose a little amount, right? That's the whole entire point of managing your risk. But if you're entering literally right in the middle of nowhere, you can't manage your risk because there's no support to put your stop loss under. Now, if we take a look at EBON, look at the area that it's in. You don't have hidden bullish divergence, but your MACD went from red to green on the daily, which looks nice. And now look. You're at this area where not once but twice you've been at before. The first time was in July of last year, the second time was in December of last year. And when you were at this area at the same exact price, what happened the last two times? The price went up almost 200%. The last two times EBON was at this price, it went on a 200% run. So all I'm saying is maybe instead of a 200% run from this price, EBON can go up about 50%, right? We're just using historical data to manage our risk and have a thesis. If it works out, we can make a lot. If it doesn't work out, we can lose a little. That's the whole entire game. So I'm looking at SOS and EBON. Hopefully that explanation just kind of gave you a little bit of an idea of what I'm personally looking at. Of course, I'm not telling you what to do. Please keep in mind there were short reports on both of these companies that you should definitely look into, and that every single stock brings on risk, okay? So those are just two names I wanted to talk about. Let's talk about the trades now. What confirmations are you looking for? I want to see how SOS and EBON do if the market pulls back. So yeah, we're going to do ticker requests in a little bit, probably about 10 minutes. But yeah, make sure to hit that like button, hit that subscribe button, check out all the links in the description if you want to join premium alerts. A lot of people have been asking me to make an annual plan. I finally made an annual plan that's also 10% off compared to the monthly plan. So if you want to sign up for premium alerts, that's the first link in the description. Let's talk about FSR, okay? It's another stock that I think is going to have a good month. Can I be wrong? Very, very easily. Is this currently in a bear trend? Yes, it is. Will it be hard to break out of this bear trend? Yes, it will be. But, and I've been saying this on stream for a while, you went from $32 to $13 with no bad news, except for like one or two downgrades that were stupid AF, in my opinion. But I have to be unbiased. As much as I love FSR, you do have some hidden bearish divergence developing on the 4-hour. You did reject the supply line last week. Technically on the 4-hour, it's not looking so hot right now. There's just no demand. There's no love for FSR. But if you ever do break the supply line, which could easily happen this week, all you need to do is have like literally a 2% move to break the supply line. I think it can go up very, very easily because it's been bleeding down on low volume. A lot of times when something bleeds down on low volume, it doesn't take that much volume to bring it back up. So really FSR, it's in a situation where I can't tell you for sure when it's going to bounce. I have no clue. But what I can say is that whenever it is, and I have no idea when it will be, it could be tomorrow, it could be in 3 weeks, it could be in a year. Whenever the life does come back, whether it might need a catalyst for that to occur, I think not only will FSR just have like a little 5-10% bounce, I think FSR can easily have a very big run from these levels because it's already had a huge run from these levels before and it's been at much, much higher areas in the short history of this stock. So that's FSR. Got a few other tickers I want to talk about. SPG was one of the new alerts I put out last week. A little bit of a retail real estate type of play, hidden bullish divergence, ascending triangle. You did back test your previous resistance as a support on Friday. You held it. Good job. YY, it's one of the swing trades I learned last week that's not actually doing too well right now. It's kind of messing around. It looked ready to go. You had a double bottom at the PCZ of a bullish Gartley. Not doing too hot right now. Just technicals are not playing out for the time being. Hopefully they do play out this week. On the other hand, DNLI, shot to guy in hat, is playing out very, very nicely. You had the inverse head and shoulders off the 200-day moving average with quadruple classic bullish divergence in a falling wedge. That is a beautiful chart. And this is what happens when you have a beautiful chart. At one point, this was up like 20%. The trade right now is up about 15%. Pulled back with the market on Friday. It's still fine. PGRE is on the cusp of a major breakout. You're showing triple hidden bullish divergence on the daily. Don't be sleeping on these charts. That's all I'm going to say, right? Obviously these are past the entry areas, but all I'm saying is you're showing triple hidden bullish divergence and you're breaking out of a major resistance where there's very little resistance until $12 and the stock price is $10.61. These are the things you look for. Even if it doesn't play out, historically, these are the things you look for on charts, okay? ESPR, it was back testing the breakout all of last week. They have earnings this week, so that can make this thing go either way. Zoom hasn't done crap for a long time, and VIR already hit the targets. So that's the recap of the ongoing alerts. And that really covers a lot of the things I wanted to talk about. It took me about 20 minutes to do that rundown. So if you enjoyed my kind of forecast going into the week, make sure to hit that like button. Let's try and get to 30 likes. How do you know how high they can go? You gotta know your technicals, which I talk about in my course and on most streams. Just kind of look at what I'm doing. I'm not sure if you're talking about SPX, like S&P 500 calls, because you said my I can't even talk. You said my SXP calls though. I think you mean SPX, but I'm not sure. We'll take a look at Clover in a second here. We'll take a look at Kern. We'll take a look at Ethereum. We'll take a look at XL. So yeah, make sure to hit that like button. I think now we can go through some chat requests. So if you want me to look at something for you, drop the tickers in the chat. I'm going to start off with the ones that I've already just seen recently. If you already sent one before, just type it in again. But remember, not financial advice, just giving you my opinions on charts. And don't request something that was up 5,000% on Friday or something that I peeled last week, because I'm not going to give you an answer. That's not how I trade, right? So let me just type in a few of these names. Let's see. Is YY a good entry here? I'll take a look at it again for you, sure. UXIN. That one had a big move last week, if I'm not mistaken. Tesla, sure. Viacom, sure. Apps, sure. To answer your question about YY, the issue here is that yes, you're still above the 200-day moving average and your double bottom lows, so you still are above support. The issue is hidden bearish divergence is possible, where you made a lower high from this high to this high, very slightly. It's very little. It's like, if you really have to zoom in to see it, but there is just a little bit of potential hidden bearish divergence. So maybe you want to see it have a nice 3-4% move before getting confident, just to make sure that there still is demand in these demand areas. Hopefully that kind of answers your question. We'll take a look at LI. We already looked at the S&P 500 in the beginning of the stream. Boston, we'll take a look at that. I actually don't even know what you mean by Boston. So give me the ticker, please. VISL, sure. We'll take a look at that. So we're gonna start off with Clover in a second here. Give me like a minute just to put out a tweet, drink some tea, and then we're gonna spend probably half an hour going through tickers for everybody here. So while I'm doing all this, make sure to hit that like button and that subscribe button, okay? Just give me like literally 1 minute and I'm gonna look at tickers for everybody. Alright, let's see. And I'm so excited to almost be at 2,500 subscribers. So hit that subscribe button, please. Let's get to it. Alright, so let me get some tea and let's look at these tickers. We got COG coming in as well. And let's start off with Clover. So Clover last week went up to 1180, which was your highs from these candles. It was your high on this candle, and it was your support on these 2 days in February. And it tested 1180 and it used it as a resistance. Actually, the day before it hit 1180, I put out a tweet sharing the resistance levels that I saw on Clover, and 1180 was in that tweet that I put out, and it hit that and it pulled back. So at this point, if you remember, I've been all over this Clover chart in these much lower areas. So at this point, I don't know. Okay, the hard work's already been done. The big move has already happened. Could it be in store for an even bigger move? Sure. You're still in a nice uptrend. You're making higher lows. But all I'm gonna say is there's already been a good amount of profit made. I'm just kind of sitting back for a little bit on Clover. If things do get crazy this week with Clover, I have no problem re-entering. But for now, it's like I've probably like out of the last 5 trades I put out on Clover, like 4 of them were like huge winners. So because I put out like 4 or 5 trades just since over here. So at this point, I'm just kind of laying back for a little bit, and we'll see what happens. In terms of the technicals, you probably want to get back over 10 and actually start finding support and daily candle closes above $10, because that was your support over here. Okay. Ethereum. Oh, we're about to wait. Oh my gosh, this is really, really good timing. We're about to see Ethereum hit $3,000 for the first time ever. This is insanely good timing. Wow. So Ethereum on the Coinbase exchange is $1, is literally 50 cents. Oh, I just pulled back. Is pretty much $1 away from hitting 3,000 for the first time in history. So $1 away as we speak. That was really good timing. So let's see if we can see Ethereum hit $3,000 live. This is a very historical thing. This is like the equivalent of Bitcoin hitting $20,000 for the first time. Not really, but you get what I'm saying. It's a very big milestone for crypto. So hopefully it can just hit it so we can stop messing around. Can I put an alert at 3,000? Let's see. Add alert. Just type in 3,000. Okay. So I'm just gonna put in that alert. If it hits 3,000, we're gonna have a little bit of a notification. Until then, let's look at the chart itself. I mean, it's very bullish. It's just, as long as Ethereum continues to make higher lows, it's probably one of the most bullish assets in the world right now. I mean, this thing was $100 last year, if I'm not mistaken. I mean, under $100, honestly. Let's see. Yeah, Ethereum was under $100 during the COVID crash, and it is now at $3,000. So it's insane how much this thing has gone up, and it's about to hit 3,000 probably within minutes. Unless there's just way too many sell orders at 3,000. But in terms of like a charting standpoint, I just don't know how much you can do at this point. I mean, I think you would probably have to look at it something like this, and you're breaking out of it, right? So it's like however you were to arrange your trend lines on Ethereum, you're breaking to the upside in my opinion. It's just you were in an upsloping channel, broadening wedge, whatever you want to call it. However you want to draw it, you're breaking to the upside. And there you go, for the first time in history, Ethereum, $3,000. That is very historical. Congratulations to everybody in crypto, because even if you're not in Ethereum, that's a very big milestone for crypto in general. So I don't know if anybody else cares about this stuff, but for somebody who's been watching crypto for years, that's so cool to see. So cool to see how far this has all come. And yeah. That's really my thoughts on Ethereum. It was more me just looking at the price, but it's in an uptrend until it starts making lower highs and lower lows. It's really that simple. In terms of Kern, I remember last fall we traded this quite a bit. You've never filled the gap though. Why did it not? It got so close. I mean, it came down to 360 and the gap fill was 352. It was like 8 cents away. Actually looks pretty decent right here. I'm not gonna lie. You never got down all the way to your supports at 340, but maybe you don't need to. You do have classic bullish divergence on the daily for Kern, which is a pot stock if I'm not mistaken. Could it be a harmonic? No, I don't think so. So let's look at it like this. You have a supply line. You could look at it like a downsloping channel, a falling wedge, however you want to draw it. It doesn't matter at this point because it already broke out. On Kern, you broke out of this wedge channel, whatever you want to call it. You ran up, tested the 200-day moving average, backed up again, and now you're flipping your previous resistance into a support with classic bullish divergence. This looks good in my opinion. I'm going to keep it on my watch list. How I would manage my risk right here is probably something like this. I'd enter probably right around here if it opens like this tomorrow. I I probably target the top of the wedge, and I throw my stop loss under that recent low you had on April 20th when a lot of small cap stocks were bottoming out. And that gives you a perfect 3-to-1 reward to risk, which is what you want on every single trade. Everything checks out here. Even if it doesn't work out, you're risking 15% to try and make 50%, okay? And that's just a game of risk management. So this is like a potential trade, and it's very, very simple too. So that's current. Let me add it to my watch list real quick, and then we'll continue on with the tickers in the chat. I know I'm really behind, but we're going to get to all of them. There's no rush. We're looking at charts together. We'll look at XL next. I want XL to go back up, but the issue is it's in such a bad downtrend. I think this might be probably a top 3 worst SPAC ever. I mean, this thing is worse than Nikola in terms of its price and its price action. 725 was your support on April 5th and 6th, and that is now your resistance. That's just not good. You need to get back above 725. I still think you're technically still in a bear trend on XL until you break back above like $10. So, I mean, under $10, it's just a very, very weird area. Of course, it can have a random pump one day, just like Clover did, just like UWMC did, which were 2 SPACs that also got down to these levels. And even XL had that big pump on some like old news or something a few weeks ago. But you just want to get back over 725, okay? UXIN, this is not really my forte of trading. I don't like playing pump and... I'm not going to say this is a pump and dump yet. Maybe it is eventually, maybe it's not. But most things I've seen like this eventually have very big pullbacks to the downside, and they make a higher low, and then they pump again, and then, you know, I don't know why this thing went up. I don't know anything about the company. Congratulations if you're in on it. It's just, I like getting in at these areas. Whenever something already does this, it's like, all right, whatever, the party already happened without me. I'm not gonna invite myself to a party that's already happening, right? I'll just wait for an invitation to the next one. And there's thousands of parties going on in the stock market every single week, so no need to compromise. That's just how I look at it. If you want to buy something after it went up 150% in a week, that's your choice. I'm not telling you what to do. It's just, I don't like chasing. So whenever I see something like this, I just move on. If you really want me to give you support and resistance, your closest support is $2, and your resistance is about $3.30. You can see $3.30 was your highs in 2019. That's also where you kind of topped out last week. And then $2 was your previous resistance, which you broke through, which would now be your support. Okay. Tesla. I like the bullish engulfing candle that it had on Friday. That's a very nice bullish engulfing candle where you engulfed all of Thursday's candle. You're in a very big make or break area. This is like, you know, really like $710. It was your resistance over here. You held it as support over here. Now you're back under it and it's your resistance again. So you're in a make or break area on Tesla. Nice bullish engulfing candle. And you have some 4-hour hidden bullish divergence developing where you made a higher low from this low to your low on Friday with a lower level of negative momentum or a higher level of negative momentum on your MACD. So Tesla looks pretty good, but you want to get back above 720 in my opinion, just to be clear of this little resistance zone, okay? Viacom, I like it. It sold off very, very heavily with the Archegos, however you pronounce it, that big, you know, nightmare of a margin call. If you know about it, you know about it, but had a crazy sell-off from an institutional dump, kind of. Had a falling wedge with hidden bullish divergence on the daily. It broke out of that wedge, and now it's simply back testing the 200-day moving average as support. As long as you continue to hold above the 200-day moving average on Viacom, I think it looks good. You do have earnings coming up on my birthday on May 6th, so on Thursday there are going to be earnings. This thing was valued at $100 about a month ago. It's at 41, so I'm going to be very interested to see how it reacts after earnings. All right, apps. Kind of just going sideways. I just say that this is probably like a channel in between 67 and 94 bucks. You're kind of in the middle, I mean, in the bottom range of that channel. So as long as you hold above 67, it looks fine, but I don't really see any bullish divergence or a pattern. It's just kind of going up, down, chopping around in this channel. So can't really give you like an edge. It's just like it's doing what it's doing for now. Other than that, don't have much to comment on it. LI, let's see. This is a harmonic pattern. Get out of here. Okay, so this could be a. It went way too. It went past the PCZ of a Gartley, so the only thing it could be now is like a crab, I think. But it's not at the crab PCZ, so I wouldn't think about it as a harmonic for now. You could probably try and find one, depending on where you anchor your points at. But I'd just say you're in a downtrend. You did show some. Well, no, that really wasn't divergence. Let's go on the daily. You showed classic bullish divergence on the daily, and you're still showing classic bullish divergence on the daily. You're just trying to hold 1859, okay? That was your resistance over here and your support over here. As long as you're above 1859, LI is fine. So what you want to do on LI is you want to break out of this supply line before falling under 1859, and you're hoping. Whoa, I almost dropped my T again. I dropped it all over my computer last week. You're hoping that you break the supply line before you fall under 1855, okay? VISL, I wanted to put out a trade on this, but I was sick in bed and I never put it out, and by the time I woke up, it just ended up going up already. So it was a falling wedge with classic bullish divergence. I think it was way too big of a retrace to call it a cup and handle, so I don't even care about that at this point. If it comes back down to support levels like 250-ish, I think you could maybe catch a nice swing, but of course it depends on what the oscillators look like at that point. Maybe it never comes back down to those areas and it continues going up. I mean, it already did get crushed. It's just like, I don't know. Whenever I miss out on the good opportunities, I don't like chasing them. I'd rather go find something else which is about to move than try and chase something that already just went up 30%. Remember, when you're trading, you always want to have a competitive advantage. You want to be in at a lower cost than most other people, because you want to be in an area where you can be taking profits by the time that they're breaking even, right? So when you're entering after the moves happen, it's like you miss the best opportunity. If you can always compromise and have a less good opportunity, or you could go look at the thousands of other stocks in the market and find a primed chart, a great opportunity, rather than chasing, right? It's always just a game of what will be best for you and your portfolio, not what do you want to be best. You just have to look at facts and not use emotions. So I know it's tough. Like, this was a horrible trade when we played it up over here, but there's so many other things that we've been crushing it on. It's like, we'll wait for better opportunities. Maybe we never get them on VISL, but we're going to get them on another ticker. So that's just kind of how I look at it. Just try and take your emotions out of it, really. COG, and I'm not saying whoever requested that had that. I'm just saying that's how I'm personally thinking about it, okay? You have a huge support at $16, as you can clearly see. And then you have a resistance at 19. So that was 19 was even your resistance here. It's kind of like a multi-level range. And you're just in that middle part of the range. So I don't really see a bullish pattern or divergence. Like, it kind of reminds me of apps. It's just going sideways, up, down, between the range. It's going to continue doing that until it either breaks above 1950 or under 16. So in between then, it's just kind of, who knows what can happen. Let me load up my watch list again. We missed some tickers. So we're going to start off with Boston, the US dollar tether. That's not on my watch list. Let me just put in Boston. BOSTON. And it's a crypto. I don't know. I'm not. Oh, BOSN? Okay. Thank you. Matey. No T. Perfect. SRAX. We already looked at UXIN. TCNNF. Tilray. UEC. Palantir. IPOE. Twitter. Riot. Theta. Okay. BOSN. You have hidden bullish divergence on the 4-hour chart, on the MACD, and on the RSI. If we move on over to the daily, you don't even have a MACD yet, so not a lot of data there. In terms of the chart itself, could this be a bat maybe? I don't know, let's see. It was pretty close to a bat. You didn't get all the way down to the PCZ, but it was pretty close to a bullish bat. And that's just, you got the reaction at the 80% retrace instead of the 886. It looks fine. You're making higher lows, you have hidden bullish divergence. Maybe like a broadening wedge or something. Yeah, I'd probably look at it like this, like a descending broadening wedge. And then you're finding support at around 350, which used to be a resistance. So if I were to be playing something like this, I'd probably manage my risk like this. I'd probably target around the top of the wedge, maybe a little bit under, and I'd throw my stop loss under your recent lows, and you get the reward to risk. That's how I would play this. You have a descending broadening wedge with hidden bullish divergence, and you're finding support at 350. I'd put my stop loss at 330, which is just under your recent lows from April 30th. And I target the candle closes on these two candles at the top of the pattern, which is about 477, and that gives me my 3 reward to risk, which is what I want on every trade. So that's how I would look at this chart. Okay, even though there's not a lot of data on the chart, that's just kind of how I would line it up. SRAX. Let's see. Not too sure about this one. I mean, this could be a harmonic in the making. Could be a butterfly, but again, you're not even close to a PCZ. You'd have to go way lower. You'd have to go to like a real penny stock price to get to the PCZ. So I just say you're in a range between 372 and 506, and you're near the bottom of the range, which is good, but you don't have a pattern or any divergence. I think you said, yeah, this is TCNNF. This one, I don't think it could be a crab, because it looks like you made far too deep of a retrace. It's not a 618, so it can't be a crab. But you pretty much did get down to the golden ratio on bounce. No divergence. I'm not too sure about this one. You clearly broke your supply line and you're moving up. So I'd say you probably just want to stay above 38 bucks, which was your lows over here and your low on April 12th. All right. Tilray, I like the stock. I like the stock. You had classic bullish divergence. You bounced off of 1558, which was your support back from January. You have a gap to fill at like 1970, and it got crushed, and it came down to a very important level, and it bounced off of that very important level. So, I mean, you could just use Fibonacci. I mean, look how much it would have to go up just to get to a 23.6% retrace. Just to hit the first Fibonacci level, you're talking about a 55% move. This is what I'm talking about. So many of these EV stocks, these pot stocks, crypto mining stocks, they got crushed so badly that just to make a little bit of a retrace of the dump that they had, you're talking about 50% moves to the upside. So I just think there's a lot of opportunity, and that could include Tilray very, very well. Nice classic bullish divergence on the daily. UEC, you have some hidden bullish divergence on the daily chart. Other than that, I don't know. You probably have a resistance at 364, and you have your support at 256, which was your resistance in February, and it was kind of your support. It was your support in March, and then you fell under it for a little bit in April, but you got back above it on the same day. So you're just kind of in the middle of a range, but nice bullish divergence. Palantir is also in this range, and you're near the bottom of the range. You don't have any bullish divergence on the 4-hour or the daily, unfortunately, but as long as you're above 2250, it looks fine. IPOE is just messing around with the supply line. Kind of rejected it yet again. It's just, you need to break over this supply line. You tried it, but you had a fake out. There was like no volume at all. So you need to break over that green supply line, otherwise the bear trend is going to continue. Twitter got crushed after earnings. I think they reported like really bad growth expectations or something. It's at a very important level historically though. You can see this pretty much like 55, 56 level. It used to be a resistance in December of last year, and it was your resistance way back in 2014. You kind of closed a little bit under it on Friday when the market was pulling back during the last hour of the day. So I'd say you want to get above 56 and hold above that. If you don't, then I have no clue how low it can go. Riot, if you're a premium member, we day traded Riot. It was like a 40% gain on the calls. If you want to get those, you know, options trades that I'm personally in, they're never financial advice, but I just share with you all of my day trades and my options plays. And you want to join premium alerts, that's the first link in the description. Just saying, if you want to start off the new month with me and the crew in the premium channels, it's the first link in the description, okay? Riot, though, we made a nice options day trade on it. At this point, I'm not too sure. You're in a very, very choppy area. I like that you have some classic bullish divergence developing on the daily. On the 4 hour, you also kind of had it as well. If you ignore this little island, you're just messing around with this resistance area, like $42. You need to start using that as support and not resistance. Do you want that to happen? And then we're talking, all right? Theta, I still just can't believe how much Theta actually went up. I mean, it just blows my mind. This thing was like literally under 10 cents last year, and now at one point it was at $15. Like, it's insane. And now it's literally showing confirmed hidden bullish divergence on the daily. So what a run. I mean, very impressive asset. You're just kind of going sideways in this range right over here. Let me just kind of draw it up. You're just kind of range bound between really $12 and $10.50. So whichever way you break out at first will probably be telling, all right? And that is Theta. Keep hitting that like button. Let's try and get to 30 likes. Hit that subscribe button as well if you're new to the stream. If you want to send me a tip, that's the pinned chat. So yeah, let's see what else we got here. We already looked at IDEX. Charge point, Link, Marathon. Is that not an inverse head and shoulders? You could look at it like that, sure. I know what you're saying. Like that. It's just, regardless of, you know, when you're using patterns, you always want to be thinking, what can this pattern tell me, right? Even if you're looking at the inverse head and shoulders, it's the same exact thing as looking at it how I was looking at it before, which was like this. Let me click the undo buttons, which is like this. It's the same exact thing, right? Because when we're looking at it just like a range, whichever way you break out to will be telling. If you break to the upside, bullish. If you break to the downside, bearish. And then it's the same thing if you're going to look at it like a inverse head and shoulders, left shoulder, head, right shoulder. It's like if it does truly bounce off of this right shoulder and break this resistance, that's bullish. If it falls under the right shoulder, that's bearish. So at the end of the day, like, yeah, you can look at it like that, but it just comes out to the same exact thing where you want to break above $12 before falling under $10. Charge point, it really wasn't like an actual pattern completion zone. I mean, it was in the range, I guess. It was in between the 1618 and 2618 from B to D, but it's kind of like really like a bullish crab, and you triple bottomed at the 2.19 retrace. So as long as you hold above $19, I mean, $33 is the top of the range. You're just kind of range bound, right? Support at the bottom, resistance at the top. You're pretty much right in the middle. And then Blink, also kind of in the middle of a range. You had some hidden bullish divergence. It played out. You got to the top of the range. You pulled back. Now you're in the middle. So not much of an edge here. I could see us going either way. MARA, it was pretty close to a bullish bat, but it just kind of went down to like the 1.0 PCZ. So I mean, I guess you can call it an alternate bat, but I think that has to be like a 382 retrace or above. You get the XABCD pattern, and then you bounce at this area with hidden bullish divergence, right? Regardless of what you want to classify it as. As long as you're above 32 bucks, I think really as long as you're above $30, it looks fine. But of course that means you have 20% risk just to get down to your major support. And the reason I say $30 is because it was your triple candle bottom on the 20th, 21st, and 22nd of April, okay? So that's MARA. Futures still up, they pulled back a little bit. Bitcoin is on the move, Ethereum's over 3K like we talked about. Crypto's doing very, very well. We'll see what EBON and SOS and Sundial and CGC and Fisker have an offer this month. Good luck to everybody in May. Really excited for this week, final week of my college semester. So for 4 months, I don't have to worry about college and I can just focus on trading. And my birthday's on Thursday, so pretty interesting, exciting stuff going on. Hit that like button if you didn't already. Hit that subscribe button. Thank you for coming out to the stream. I'll be live again tomorrow night at 9 p.m. EST. Have a good night, and I'll see you tomorrow. Peace out. Oh, that's the wrong overlay. Peace out again.